You're with us here on Business Today. I'm Abha Bagaya. Let's take a look at how markets are faring this afternoon. Let's bring up the indices for you and get a sense of all the action, particularly on policy day. Just a 0.5% downtick right now. Definitely seeing a little bit of pressure there, even though the governor maintained the growth forecast and kept repo rate unchanged. So that's the second bi-monthly monetary policy meeting of FY24 right now. And most of the members also wanted to remain focused on withdrawal of accommodation. So perhaps that's why we're seeing a little bit of a negative reaction coming in. Let's go across to Nipun Mehta, who's joining us today. Nipun, good to have you with us. Let's dive straight into the policy because even though it's status quo, markets are looking a little jittery post.
Sure. Good afternoon, Nava. I think, yes, the policy was more or less on expected lines. Repo rate maintained, which was what generally the street expected. Inflation being under control again, that's being under a big positive. And the governor's statement that they would keep as he said, an Arjuna eye on inflation, which obviously is positive. Clearly, indications that growth is likely to be maintained is another positive. So overall, fairly positive, but clearly, I think markets had discounted this more or less over the last few days in anticipation that this would be the repo rate would be kept constant, and hence probably a bit of sort of profit booking, so to say. But I think clearly what will be watched would be what Fed also has to say. That meeting is in a couple of weeks' time. That's something that could also define and determine how global interest rates move or how global growth is expected to be, more or less. And that would broadly also define currency movements over a period of time.
Okay, so in light of the policy, Nipun, let's talk about what you think is going to be most impacted. We've got a hawkish stance. We've got the monsoon on the anvil. What does this bode for some of those consumption stocks?
So I think consumption should start, in a way, performing much better going ahead. Two or three critical factors again. One, monsoon expected to be normal. Two, as the governor mentioned, and as we are seeing gradually in terms of numbers that are coming in, that rural demand seems to be picking up. It hadn't picked up to the extent that was anticipated maybe a quarter or 2 quarters back. But what we are seeing either in terms of two-wheeler sales or broad FMCG consumption is showing up improved rural demand. And if the monsoons are good as anticipated, you could see further growth in rural demand, which should boost consumption and effectively the entire space should benefit out of improved volumes and even probably better margins.
Okay, fair enough. What about some of the other movers? Let's take a look. Power as a segment has consistently been moving higher, and even today we're seeing a fair bit of action coming in there. What's your outlook when it comes to this particular pocket? Anything that you're tracking there in particular?
So of course, the entire power space has been sort of slowly and gradually inching up. It's not just in terms of the extent of power that's being used, the extent of power demand that has improved and increased over the last 2 or 3 quarters, but additional capacities, companies manufacturing transformers, distribution companies. I think overall what you're really seeing, and on top of it, improved not just government capex, but also indications of higher private sector capex happening is likely to ensure that there's higher power capacities set up. That's something that's clearly reflecting in the extent of order book that a lot of these power companies have, or a lot of capex companies have. I think what's going to be critical is the extent of execution and the pace of execution that they have. You've already seen improved revenues, better growth coming in for a lot of these companies which execute power projects. But overall, as a segment, we would be positive as far as power is concerned.
Okay, the mid-cap part of the market has also been seeing some amount of traction. Nifty mid-cap 100 is at a new high. Nipun, let's pull up some of the names there. Anything that you've been tracking, are you still sticking to the heavyweights, or are you also looking at some of these names that are perhaps standing out? Oberoi Realty, for example, just to name one off the bat, but a couple of these real estate names are definitely also seeing some traction.
So we've been sort of positive or bullish on mid caps and small caps for about 2 quarters now. I remember mentioning it on this channel itself that it's about time the valuation differential between large caps and mid caps and large caps and small caps as well probably would get narrowed. You're seeing reasonably good, very selectively, of course, but you're seeing reasonably good performance coming in, good results coming in from the mid cap space, small cap space. We must, of course, remember that the small cap space, as defined by the mutual funds or the various indices that are there, is almost now 18,000 crores and below, the small cap space. And that really includes a fairly large universe of companies and stocks which has been really performing well. One would need to be very selective, of course. So even if, let's say, we take either the realty space that has gone up, or let's say very selectively the mid-cap IT space that has seen a fair amount of traction. You might not have seen a lot of traction in the large-cap IT space, but in the mid-cap IT space, there's been some traction. Selectively, again, a lot of the defense companies have moved up based on their order books and the kind of execution that we've seen and the kind of visibility of revenues that they're having over the next few quarters. So again, you can look at autos within that, the mid cap space. If you look at the auto anchs, almost all companies would be in the small cap space. Very few really, you can count them on the fingers on the mid cap space. But really, performance in some of these sectors really outstanding, and clear visibility over the next 2-3 quarters. So yes, some of these mid caps and small caps in very selectively as a bottom-up approach in some of these sectors look very positive.
All right. What about IT? We've normally always, of course, see IT banks rally the markets. When it comes to IT, we've been seeing a couple of sessions now consistently. A lot of questions around deal flow and whether or not it's looking robust as we move ahead, fears of a global recession. What's your take, Nipun?
So over the last 2 or 3 quarters, probably there has been a degree of slowdown in terms of order flow. Two, management's being cautious in terms of what could be the pace going ahead in FY24 on the order flow that could be there. Fears that there could be a recession slowdown, which hasn't really happened, but because of which you've seen slowdown in terms of actual orders flowing in, both from the US as well as Europe. Our sense is that sooner or later, and based on the fact that globally inflation seems to be coming down, fears of higher interest rates seem to be waning, fears of recession seem to be waning, and probably there could be a marginal slowdown that could happen. Once there is greater conviction on this, order flows as far as IT companies is bound to happen. Earlier, there were fears that probably for 4 to 8 quarters there might not be order flows coming in, but our sense is probably another couple of quarters of indications that order flows could start coming in, and you could see larger IT companies there. In any case, the extent of diversification, or the extent of focus that they've started having on AI, and a lot of the segments within IT where order flows are expected thick and fast, is something again which should start showing up in terms of revenues over the next 2 or 3 quarters. So we're positive about the large cap IT space as well, which could probably take some time for that traction to start coming in, or for the order flows to start coming in. But within that IT space, if you see, there are a lot of smaller or mid-sized IT companies which have continued to get orders, or some of which are product-based, and where there has been a fair amount of revenue growth that one has seen, whether it is from the banking sector, whether it is from insurance. So really, we would be very selectively positive as far as IT is concerned, particularly the mid-cap space, and maybe keep a watch on the large-cap IT space for a quarter or so, and one could probably see traction post that.
Okay, fair enough. You know, Nipun, we're close to those lifetime highs. Sensex down today 300 points, but we're just, close to knocking distance from 63,000. What's your view on the markets? Given some of the commentary also coming in from the governor today, while growth targets remain intact, even though World Bank and otherwise are also hinting at a slowdown. Do you feel that markets are going to continue to be resilient, at least in the next quarter or so? Do you see that kind of visibility, or would you still remain a bit uncertain?
So we're of course just about 1% in terms of Nifty levels away from high levels. But our sense is, given the kind of macro data that's come in, given the kind of earnings that have come in, given the kind of positive management commentary and the extent of management confidence that is there in a lot of segments, in a lot of sectors, where they are constantly wanting to expand capacity now, is something which is uh, expected to make markets a lot more resilient. Also, given the fact that the retail investor has, despite whenever there was a sort of even a marginal 3 or 4 or 5% fall in the market, continued to invest in anticipation that the economy was on the right track, on the growth path, in terms of both direct, indirect tax collections and the overall macros that are there, whether it is deficits, whether it is crude oil prices which are benefiting, which are helpful for the Indian economy. All of which has created a lot more confidence as far as the retail investor is concerned, and that's something which could make, or is likely to make, market lot more resilient. Our senses over the next quarter or two, while there could be, when you are at sort of all-time high levels, that it brings its level of volatility in the markets along with that. But our sense is the investor maturity as well as the resilience of Indian markets now it makes it a lot stronger in comparison to global equity markets.
Okay, wonderful. Thanks so much for joining us, Nipun. Always great chatting with you, and good to have you with us on BTTV. That's where we'll leave it for now. Markets holding fort, of course, not having a wonderfully green day, but nonetheless, just about 100 points down on the Nifty. We're not too far from those life highs, so holding fort. State-run Bharat Sanchar Nigam has